Good afternoon, everybody. It's Paul here. Here we are, 19th of November 2018 for the next session in the Abnormal Markets webinar series on mastering the 4Ms of trading. My name is Paul Wallace. I'm a trader, analyst and coach. I am our guide for this interesting webinar series that will help you evolve and develop as a trader. As always, we'll begin with a quick risk disclaimer. Trading with financial instruments offered by Abnormal Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying video is for information and educational purposes only. Online educational materials are developed by Abnormal Markets and distributed by the Abnormal Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. Presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors. As of August 2018, the regulation within the European Union differs for retail and professional clients. In our presentation, we use demo trading accounts where all clients can still use our high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Abnormal Markets UK receive a compensation of account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. Abnormal Markets provide a wide range of products and services. Two of their most popular instruments are the DAX 30 and the Euro Dollar, both of which have a typical spread of about 0.8 pips or 0.8 points during the main trading hours. They also provide the MetaTrader 4 and MetaTrader 5 platform and provide the Abnormal Markets Supreme Edition. If you have any particular questions or queries, then please feel free to get in touch with your account representative and they'll be happy to talk to you. Also, Abnormal Markets is, is a global player. It's a global brokerage and has the correct offering for wherever you may find yourself in the world. Once again, said if you get in touch with your account representative, they'll be very happy to guide you through opening an account with Abnormal Markets. So, as always, ladies and gentlemen, I like to set our expectations for our sessions. For me, it's to educate you about the 4Ms of trading so you can go away and analyze any market and be ready to trade it, and also to help you raise your self-awareness about managing risk and also about managing yourself. For yourselves, ladies and gentlemen, we're always on a time limit, and I appreciate we have a broad range of experience in the room, so that sometimes I can only go into some topics with as little opportunity as we have available. So I'm always going to focus on tools that you can use tomorrow, something that will sort of generate some thoughts within yourself and give you something to utilize in your own trading endeavors. That's what all of these sessions were about. So, if you'll remember, those of you who've joined us, okay, those of you who are watching us here on the on demand on the Abnormal Markets YouTube page, this series has all been about understanding and mastering the 4Ms of trading. What are those 4Ms? Markets, method, money, and myself. And that's what we're here in these sessions. We're going to be educating about them and we're helping raise your awareness about them. Because what certainly I found in the 10 years or so that I've been working with helping and developing traders is that there's a real sweet spot there. Okay, that once a trader has those 4Ms, well and truly under control, then they're in a position to sort of trade better and develop and deliver a better performance. And that's what we're trying to do as traders. So, we talked about it, and for those of you joining, what happens is, this will probably be the last week of it in terms of running through a sort of a recap of the sessions that we've gone beforehand as we focused on markets and methods. So, what we talked about back in, one of our earlier sessions is about what can help a trader master those 4Ms is to have a very simple process, okay? Very simple process, very simple routine that helps generate the correct habits and behaviors as a trader. And we talked about it. Step one being, whenever you look at a chart, make sure you define levels of support and resistance. Step two, Define if there is a trend if possible. Step 3, look at how price reacts at key support and resistance levels. Step 4, look at price action signals at those levels. And step 5, understand, are they part of a bigger chart pattern? And that's what we've been covering for the last couple of months, just building on that, adding some particular details so that you have, plenty of tools and tactics to take away. So, we've focused mostly on markets and method, and we're going to sort of this session and next week's session, or the next session will be about markets and method, and then we're going to start to sort of gradually move towards the sort of the managing money and managing myself, and that's what we'll be looking at. So if you remember, with methods, we're looking at, you boil it all down, you're either trading a break of a line of support or resistance or a bounce off a line of support or resistance. And it's as simple as that. We often make things more complicated than they need to be. And, I'm as guilty of that as anybody. Keep it simple, boil it down to its most simple elements so we can understand it and we can execute it as well as possible. So, we talked about, lots of different price action signals, and I go through them every week just because the more you hear it from me, the more it sinks into your trading psyche, the more it becomes about your sort of trading habits and behaviors, the more it becomes part of your trading routine, and that's what we're looking to do to help you build those good trading routines, habits, and behaviors. If you remember, pin bar it's a very popular trading signal, okay? Very popular. They stand out very clearly, okay? And what we're actually looking for is that, the open and close should be within the previous bar. The candle or the wick should be 2 to 3 times the length of the body, okay? And as I said, the better ones stick out quite clearly, and they're very clear on charts, And you can go back and you can learn more details about that by finding the specific session that we went through on that. This is just merely a recap of all the areas that we've looked at in terms of trading markets and trading methods. Pin bars, it's what it is. We talked about looking for it as an opportunity to sort of trade a pullback in an existing trend. The reason we like pin bars is because they show rejection of a particular area of direction. We don't want to fight them. We want to use that information. Okay, the market is always communicating to us. We want to use that to basically give us an opportunity to join the trend and trade with the trend where possible. So, after pin bars, we looked at engulfing candles, okay? Talked about, they don't happen very often, okay? But when they do, we certainly want to sit up and take notice of them because it demonstrates total overwhelm, especially when we see them at the end of a trend. They're a very clear reversal pattern. So we look for bullish engulfing candles at the end of a downtrend, and we look for a bearish engulfing candle at the end of an uptrend. And we look to trade in the direction of the close, the engulfing bar. As I said, they don't happen very often, but when you do see them at the end of a trend, you want to sit up and take notice because they are giving us an opportunity. We looked at a 3-bar reversal setup, which is just me providing you with a very simple mechanical trading sort of setup that you could utilize in your own trading, and it was just very, very simple, really. We're very simple, looking to define if there's a trend, wait for that pullback to support resistance, and then in an uptrend for a long, we need 2 seller bars followed by a buyer bar, and in a downtrend, okay, for a short opportunity, we need 2 buyer bars followed by a seller bar. And that was as simple as it is. What we looked at is that it's a case of that we ideally what we want to see is 2 red bars followed by a green bar in an uptrend at an area of support and resistance, and if that buyer bar is something like a pin bar or an engulfing bar, okay, that we've talked about, well then that makes us even happy. It just gives us more confidence. Then we looked at, for a week, we looked at inside bars, okay, the opposite of an engulfing candle, all right, the high and the low of the bar is fully within the range of the preceding bar, all right, so we talk about it being like, markets are made up of humans interacting, and humans, we surge, we rest, and then we surge. The inside bar is the end of the rest, okay, and we're looking to catch the next surge, we're looking to get ready to sort of take the opportunity to take that surge. We've talked about, trading, on sort of longer term time frames, but all of these particular signals and setups, they work all across all instruments and all time frames. And what we can say is that, if you are seeing inside bars on sort of larger time frames like weekly and daily, you might want to use 4-hour charts to execute and manage, but also be aware of false breakouts. But, despite the false breakouts, we can also use inside bars to sort of join a new trend when it works in a true breakout. We look to wait for the breakout to occur. Then we wait for an inside bar to be printed, and then we want to trade in the direction of that breakout. Becomes very simple. It's a very nice, very easy, very simple sort of trade setup that you can keep an eye out for and look to engage with markets over. Then we went through key day reversals and momentum reversal candles, which are which we talked about. Okay, it's a sharp reversal pattern that occurs at the end of a trend. In an uptrend, prices open to the equivalent or above the previous day's close. They make a new high in that session, and then it reverses and closes below the previous day's low. In a downtrend, prices open the equivalent or below the previous day's close. The price makes a new low, and then it closes higher than the previous day's high. And that's what we're looking for. We're looking for a complete reversal within that session. And that in itself, when it happens at the end of a strong trend, that can give us a great trading signal. But, a little bit like engulfing candles, KDRs, key reversals, don't happen as often as we would like them to. So a version of it is called the momentum reversal candle, okay? Some people call it a swing pointing. There might be different names for it, but, what we're looking for is, the momentum reversal candle happens a good deal more often than the key reversal. If you remember from that, how did we see that? Well, let's say for a buy, okay, for a trigger day, price would be in a downtrend, price would make a new low, but price would close higher than the previous day's close, okay? KDR, remember, will close higher than the previous day's high, all right? An MRC, momentum reversal candle, only needs to close higher than the previous day's close. Okay, so they happen a good deal more often than KDRs. And, when you have the right context in terms of understanding those 5 steps we started our session with, well, then you're in a position to use MRCs as an trading opportunity. We also looked at 1, 2, 3's KDR combos. Okay, we did that, for one of the particular weeks we looked at. All right, so if we've had a good trend, a nice uptrend, and then price sort of rolls over and prints maybe an individual a key day reversal. Okay, which could be an engulfing candle or a pin bar. Okay, then we start to sort of get interested as we start to sort of it gets us to focus our attention. We then wait for a 1, 2, 3 pattern to form. If you remember, the 1, 2, 3 pattern is what we went into in a good deal more depth last week. But when this particular sort of setup, we're waiting for the 1, 2, 3 to provide us a lower high, because we're not trying to pick the exact tops in markets or the exact bottoms. Trying to pick the exact tops and bottoms is a very tough game. Okay, what we're looking to do is to let the market play its hand, let the market show its hand and show us what it wants to do. The point 3 of the 1, 2, 3 could also be a rejection or an indecision candle, something like a pin bar or an engulfing candle, something that we have actually, we've talked about in many of our sessions. And then also you can also sort of collaborate with the power of the 20 period moving average, which is another session we did, okay, or whichever fast moving average you like to use yourselves. And then what happens is that now basically turns from resistance or from support to resistance. It acts as a roof. It caps any further move north if we've been in an uptrend, and that just all it is it brings back that confluence of events. If you remember, I've talked about that every week. We're looking for a confluence of events, right? 2 to 5 things to come together at one time and place that just give us a great idea that this is where we want to be doing our business. Then we looked at general chart patterns. Okay, if you remember, we talked about how the drawing in lines of support and resistance that create various chart patterns that they can be traded. And there are 2 types of patterns: there are continuations and reversal patterns. That's what we look for. Continuation patterns, if you remember, we looked at things like bull and bear flags, ascending and descending triangles, symmetrical triangles, head and shoulders. We talked about in terms of reversal patterns, along with double tops and double bottoms. And triple tops and bottoms as well. And we focus primarily on those as opportunities to be aware of. So we looked at some general chart patterns. Okay, the bull and the bear flag, which we discussed, and we went into them in a good deal more depth in the individual sessions. We looked at ascending and descending triangles. Okay, they will show up, and maybe we'll have a little look at one or two of those that have shown up in the charts in the last week or so, if you have time at the end. We looked at symmetrical triangles. Those of you who join me on the Tuesday morning real-time daily trading ideas sessions, okay, we very often talk about when I see price coiling up like this, getting ready to explode. And there's a screen that has pretty much all the continuation patterns in there that you could ever want to learn and use and trade. Okay, they're very simple, but you get into a habit of drawing them in your charts. Then we looked at reversal patterns, particular head and shoulders. We've looked at key reversal, okay, triple tops and double tops and bottoms. Double tops and bottoms we talked about, and we're going to talk about a lot of them in, especially when we look at intraday trading, shorter term trading in the new year. If you remember, we looked at head and shoulders patterns, okay? We talked about various types of reversal patterns that comes from head and shoulders, what we're looking to do is to identify the right shoulder, then we're looking to sort of take the distance between the head and the neckline and then project that from where we break out, and that becomes our particular target. We also looked at inverse head and shoulders. Well, that's just the exact opposite of a head and shoulders. Okay, we're expecting being in a downtrend, and this is giving us an idea that the trend is going to reverse, and we're going to move to an uptrend, and that's what we're curious about. We looked at double tops and bottoms. The double top just looks like an M formation. Okay, you always want to find out where's the neckline so you can trade it. Same with the bottom, it looks like a W, okay, and what we're looking to do is to identify the neckline, and when we get a breakout from that, well, that gives us the opportunity to, to join the new trend. Triple tops and triple bottoms, they are versions of that. Okay, they're just simple versions of that. All right, versions of like double tops and double bottoms. It just takes more, but actually very often, the longer the sort of the trend takes to transition, the stronger the new trend may well be. Then we looked, I think it was about 2 weeks ago or so, we looked at the power of 20, PO20, as a simple trading tactic, okay? We talked about a little bit like the KDR 123 combo, all right? Once a market's printed a reversal pattern, we're going to use the 20-period moving average as confirmation of that reversal. We watch to see how price reacts to the moving average after the reversal pattern. And does that moving average now go, does it flip, okay? Does it flip towards sort of providing dynamic support and resistance, okay? Does it change? We look to see if, the 20-period moving average now acts as a new roof, okay? Dynamic resistance for shorts, or as a new floor, okay? Dynamic support for longs. Okay, because when we see that happen, well, that gives us a lot of confidence that the new trend is about to take off, and we want to actually sort of join that trend. We said that once you've had that confirmation, okay, of the 20-period moving average acting as the dynamic support resistance, well, then we can use any of the price action setups that we've previously discussed. Things like pin bars or engulfing cars or momentum reversal, okay, or KDRs, okay. We can use those as triggers to actually create our own trade setups. So yeah, there we had an example there of double bottom there that's on the Nikkei, okay, 4 hour. We had a nice double bottom at 21,000, and then basically what we could see is that we had the 20-period moving average, the blue one, just acting as dynamic support, and that was giving us an indication that we were getting an uptrend for the next few sessions. Then I think it was last week actually. Yeah, last week we had a look at the 1, 2, 3 pattern, if you remember that, okay. And what we looked at was very simple bearish 1, 2, 3 pattern. We can see that price is reversed. Price makes a top at 0.1. Price falls away to 0.2. Price rallies up to 0.3, okay, and actually as it reverses, and falls away, that gives us a 1, 2, 3 pattern, which is also the 0.3 is now a lower high, okay, so it's giving us an indication that invariably, that market is rolling over. And what we also have here is, we had various aggressive ways of sort of sharing about how you can trade it. Okay, some people will be very aggressive and try and trade the sort of the break of the line between 2 and 3. That's quite an aggressive way. All right. Also, we talked about, kind of an ultra aggressive way is that, once you see point 3 form, that if it is a particular, rejection candle, like, maybe a pin bar, well, then, we'd look to take a trade there, so long as other elements lined up. Excuse me. So yeah, we wanted once again we wanted a confluence of events. We wanted point 3 to be doing things like bouncing off a pivot, or bouncing off a trend line per se. Okay, or we'd look at it as, maybe it was pulling back into a nice 50 to 62% Fibonacci retracement zone, something we'll look at in more depth in the future. And yeah, just remember that that 1, 2, 3 could actually be a double top. Okay, it could be an M formation. All right, so just be aware of that when you're finding these on your charts. So we've just flown through there, through a fair bit of what we've covered over the last couple of months. And as I said, I go through that recap because the more you hear it, the more it sinks into you. Okay, the more it becomes your natural way to trade, and but that leads us on to understanding, what are we looking at when we're looking for such things as trading plans, and that's a thing of particular interest, okay, for us. What we've looked at, okay, is what we've looked at is effectively a case of we've looked at a few trading setups, okay, under the banner of the method, okay, of the 4Ms. So we've looked at those trading setups, right? Pin bars, engulfing candles, inside bars, 3-bar reversals, key reversals, momentum reversals, KDR 1, 2, 3 combos, power of 20, 1, 2, 3 pattern. So there's effectively there's 8 kind of almost like setups there, and some of them are admittedly combination setups, but with 8 setups there, that gives you a lot to look at. It gives you a lot of opportunity. Think of it, it's just like different tools in a tradesman's toolbox. But what we need to do is we need to start to understand a little bit about, well, we don't just trade a method in isolation. We don't just have a particular trade setup. What we need to do is have an understanding of it. Okay, when you look at them just as individual elements like that, well, it's just a simple trading tactic. But actually, what we need to do is to build upon that. So, of course, I meet lots of new traders. I work with lots of new traders all over the world. Okay, and invariably what they talk about is how that they'll talk about trading strategies, trading systems, trading methods, trading plans. All right, but I'm just trying to work out what do they actually mean. Okay, so at the top level, all right, ladies and gentlemen, what you should have is a trading plan, and as it says there, the trading plan is just it's a set of rules consistent with a trader's chosen methodology and a system that govern how trades will be executed in real time. These rules determine what will happen based on the trading system's entries and exits, risk management, psychology. Trading plan is meant to keep the trader disciplined and safe from their own weaknesses while providing the parameters for consistent profitability. It's a nice little description of it. But what we talk about is, you can actually have 2 trading plans, okay? It's almost like made up of 2 elements. You have the strategic business plan, which is a couple of sessions in itself. And you also have the tactical trading plan. And at the moment, it's more the tactical trading plan that we are focusing on. And that would be where our focus is. But, invariably, that's what will lead on to helping us build a business plan. And as I said, the strategic business plan is something we'll talk about in a good deal more detail in future sessions. So yeah, so as you said, the strategic business plan is your overall big plan, and the tactical is like, well, how do you engage on the market day to day? What you might realize is, those first 5 points we talked about, okay, the first 5 steps, and you're having the different price action signals. Well, that is actually the first part of you building a tactical trading plan, right? So it's the first part of you being able to work with markets and have a plan that you can follow day to day. People say, well, why would you do that? Why do I really need to do that? But, there's this great quote from Benjamin Franklin, the American president: by failing to prepare, you're preparing to fail. And he's absolutely right, okay? And your traders are no different, okay, Traders are no different. We need to, we need to have prep. We need to be prepared for when we engage with the market. Okay, and by having a little plan that we can follow, that just makes it easier to do that. So, as I said, sometimes, especially with a strategic business plan, people say, "Well, why bother, Paul? I don't need to do it. I just need to trade all the pin bars." And remember, it's about actually being a professional with a business, right? You're either an amateur with a hobby or a professional with a business. All sustainable, profitable businesses have a strategic business plan. Okay, it doesn't matter whether you are Facebook or whether you are Apple or whether you're General Electric. Okay, all of them will have a strategic business plan, and your trading business should be no different. Okay, it should have even if it's only a couple of pages to begin with, it should have a simple strategic business plan. And as I said, we're going to talk about that, in more detail in future sessions. Okay, but realistically, if you want to start working on it and building one, well, it's just thinking about business planning. Okay, it's business planning about what, it's about when, it's about why, it's where and how. All right. And you do that because it serves as a reminder and a yardstick of your goals and your progress. You work on it every month, okay, and it just will help you, give you a little bit of focus. It'll also help you improve because you're working towards a bigger plan, and a bigger plan that will help you create and increase the profitability of your overall trading business. So great quote here from Sun Tzu here: strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. And your man Sun Tzu was onto something there. Okay, he certainly knew that. And very often what I find is that there are traders who might have overall strategy, but their tactics are very poor or non-existent. Or what I find is very new traders, okay, they have lots of tactics, but they don't really have any strategy. They don't really have an overall strategy for how they will engage in markets. So, when we look, we just touched a little bit on the strategic business plan there. As I said, that'll be more a couple of sessions for us to do in the new year in detail. But when we look at the tactical trading plan, people say, well, why bother, Paul? What am I gaining from it? And excuse me, the reality is, there are many trading systems out there. Okay, you can Google that. You can find thousands. Okay, we've talked about that before. But what happens is, most people who set out to become traders, they find it difficult to stick to their trading system, right? And not surprisingly, failure to stick with that system usually results in poorer results. Why does that happen? Well, sometimes you actually get confidence. They get overconfidence. All right, new traders, they get a few successes under the belt. All right. And they start to believe that it's them rather than their system that is selecting good trades. Or maybe it's the need for variety, okay? Sticking to the same systems can become mundane and people just seek change. So even if they have a good, profitable, winning trading method, then, they might still just find themselves just, being impulsive in their trading because, they need variety. Also, they might just need a bit of excitement. Okay, it's if your strategy gives you a steady stream of small winners, sometimes it's tempting to go for a home run once in a while, and invariably that can be the undoing of many a trader. And also then there's also an element of a need to be trading. Okay, over trading is something that hampers lots of new traders. Right, they think that if I'm not pulling the trigger on trades, well then I'm not going anywhere as a trader. But what we like to talk about is actually it's about taking good trades. Okay, good, well managed, good, well thought out, well prepared trades, and that's what we're actually looking to do. Right, that's what we're looking to do, and having a tactical trading plan will help you with all of those elements. So the tactical trading plan, it provides structure, consistency, it helps you build discipline, and it reduces errors and emotional leakages. And what's the overall impact of that? Well, it tends to improve results. Having that tactical trading plan is about, helping you save you from yourself, okay, in terms of some of those needs to be impulsive and to overtrade, okay. Having that tactical trading plan, it brings you a little bit of that sort of structure and consistency. So how can you go about creating a tactical trading plan? Well, it doesn't have to be that much, all right? It doesn't have to be that much. You don't have to write reams and reams. But it can be simple, a single page. It can be like checklist style. All right, it should be so simple to interpret that your 10-year-old kid or niece or nephew or grandchild could actually just trade it because they're just literally following the checklist. It very clearly defines your risk management principles, and I appreciate we've not really touched upon that yet, but we will be going on to that as we focus on risk management, money management going forward. And it's very simple and very clear about where do you get into market, where do you get out for a loss, or where do you get out for a profit. It just allows you how to operate a little bit more wisely in markets. So that's actually a very old sort of very simple tactical trading plan for a particular trading system from a good while ago, and you can see it's actually just a series of checklists, a couple of questions that once I've been able to sort of answer yes to all of those questions, that means that the trade is in play. Okay, we're off to the races, and actually just a few extra rules underneath just to make sure it's kept very simple and very clear on what is required. And that's what I say, to begin with, a very simple tactical trading plan can just be simply one page at the moment. That's all. So, if you think about what you gain from a strategic business plan and a tactical trading plan, all right, so when you combine those two with good record keeping, all right, well, then what you do is you start to build a picture of yourself as a trader. And in particular, you start to understand your strengths and weaknesses, start to understand your, preferred trading style, start to get a little bit of insight into where your business is at its most profitable. All right. If you're sort of trading end of day, okay, on gold, but you're also trading sort of very short time frames, sort of 2-3 minute charts there on let's say the DAX or something. Okay, well then it might be sort of by keeping the records and understanding and reviewing and debriefing your performance. Well, then you'll start to get to understand where is your business at its most profitable, and that's where you should be focusing your time and energy and efforts. And all of that, it also keeps you focused. It keeps you on your toes. It keeps you focused on following a plan, and that actually tends to just help provide a little bit of accountability. Okay, which is what traders need. So, my suggestion is, if you're trading at the moment, you don't have a tactical trading plan, okay, then, just stop what you're doing and create one, okay, as soon as possible. Doesn't matter whether it's handwritten or a PowerPoint slide, it doesn't need to be perfect. It's important that you get it somewhere, maybe post it up so other people can see what you're doing so that they will actually back you, in your endeavors. So, what we find is that amateurs, they see the sort of strategic business plan and tactical trading plan as a complete waste of time. Okay, they'd sooner be in front of the chart pulling triggers on trades. Whereas professionals, we see it as an investment that develops and improves performance and, therefore longer term P&L as well. All right. So, just taking that idea and to have a look around to some of the sort of traders that or that you might work with, and just have a look and see how and what their particular business plan and trading plan are like. So there you go, ladies and gentlemen. We've just started to nudge our way in towards training plans. Okay, next session we'll look at some method reviews. We'll look at reviewing the methods we talked about for the last few weeks, starting to add some more meat to the bone, starting to build up and understand where your trades will be executed, so you're in a position to actually take forward the data and start to make some trades for yourself. As always, if you have any questions about today or any of the previous sessions, you can call us on the London number 020-77264-003, or you can email them at hello@admiralmarkets.com. By all means, you can have a look at the YouTube channel, which is /Admiral Markets, or you could look at Facebook as well, okay, and the Admiral Markets global page there. So there you go, ladies and gentlemen. I've got a couple of minutes left. So what we'll do is I'm just going to go across to the charts now. I'm hoping that it'll just show up there, okay? Hopefully you can sort of see that. We've got a few minutes left. We'll just focus on that. There you go. I can see that most of you are able to see that Facebook chart. So let's have a little look, some of these charts again. Let's have a little look at an idea of what has been going on. I'm just going to move this out of the way. So this is the Facebook chart, okay? It's the weekly chart, and I'm just going to zoom out a little bit here. Just going to zoom out. You can see that for a long time that actually what we had was a very nice uptrend, okay? And let me just show this as we go. And as price moved its way up, you can also see that it was in a very nice clear uptrend. There was lots of 3-bar reversals that came into the market there, and we've had the last sort of, let's say, 18 months of prices rising higher, but being challenged by as we've got into sort of heady heights. And what we saw here, okay, on Facebook was back in what we saw here in sort of July, we had the start of the big sell-off on Facebook and on quite a few of those tech companies. What you saw was this is a very good key day reversal. Price pushed to a new high, okay, and then effectively closed beneath the lows of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So effectively 12. The previous 12 days trading volumes, we can see that it actually closed beneath that. And what we can see is that was giving us an idea that this trend was coming to a juddering halt, and it had done. And we saw it could extend it further than from the trend line. If I just push out there, okay, like that, then here we go. Then it's then you'll see that we had a price fell down to the trend line and then it broke, and then actually what we can actually see today is see that it's actually moved further down. It's hit that weekly hit 200 points there. So just had here we go. Just had I think it was a question there. So Yudi asked a question. Okay, where can I get all the presentation slides, notes? Can they be sent to? What you'll find, Yudi, is that within the next sort of day or two, you'll find that this is being recorded, this session, and it will be in the Admiral Markets YouTube page. If you go on there, you'll be able to find it, and you'll have access to that. Okay, and you'll be able to watch this as often as you like. You'll be able to get to listen to my dulcet tones again and again. I hope that helps you. So yeah, Facebook, we can see there was kind of interesting there, wasn't it? It's just fallen down there. I was talking about it breaking that trend line. If it did, if it was going to kiss the trend line and goodbye and then go, and that's what we can see. It actually clearly did there. Okay, clearly sort of just fell away there. So I just wanted to have a little quick look at one or two other just charts, okay, just to show you how these patterns, these ideas, they set up time and time again over all sorts of time frames. Okay, let's see if we can get a chart here. Okay, so I was hoping to, let's see if I maybe I have maybe I've going to delete the chart. Let's have a look at here at I wanted to have a little quick look at Bitcoin for us. So for those of you who have joined us on the sort of daily trading ideas, what we had been talking about was, I'd been talking about on my session about how, we were looking at the 6,000 level here. I'm just going to draw this in, okay, easily done. And, we talked about, 6,000 being there, and, what did we have here? Well, what we had here was a descending triangle there. Hopefully I'm drawing in that a bit scruffy there, so I apologize for that. Let me just maybe tighten that up there a little bit. But actually, what we'll do is, we've broken through that now. You can see that descending triangle, and we've broken through that, and now we're actually we're sort of careering our way down to that next level, and I look for that next level, where are they on that sort of levels of support and resistance? Well, here we are at 5,000. Okay, that's what I thought that's what I thought our next one would be, around about 5,000. And then I'm looking down realistically, maybe down towards 3,000 at the next level, which is where around about the weekly 200 is. Okay, so we had lows and highs here. Okay, so if it continues to break that, if it could head down to 3,000, if you think we've come from nearly 20,000 at the start of the year, right? We're 6,000, 6,300, and we're already down to 5, and if we go down to 3, that would be a halving again of it as well. So that would be that would be pretty brutal on the crypto market, okay. But if you've been selling that, and Admiral Markets provide that as an opportunity, well then there's opportunity there for you in terms of looking at how that simple pattern that we've been talking about and describing, okay. We've been talking about big psychological numbers, okay, how that broke down from it. If we have a little look at the sort of, just had a look at Facebook there and how it's come off there. Facebook, what we had was a case of had a nice double top here, and a nice double top here again. On across all of the major American indexes. Okay, we saw that the 50-period moving average had been acting as dynamic support. We can see we had a double top. Price broke that kind of neckline. I thought at the time we might come back up to see it, but actually what's happened is price was selling off that hard and that fast that it's come down to there. Okay, and then we've had a bit of a bounce up, but today you can see news about Facebook, news about other things. We can see that the price is just dropping there very, very quickly, isn't it? Okay, and that's an indication that something is going on. Okay, and I suspect we might see the S&P 500 is doing exactly the same, because what we find is that there's indeed a real correlation between those American markets, okay, between S&P, S&P, Dow, and the Nasdaq, okay, and to a lesser extent the sort of the FTSE and the DAX, okay, but they're wanting to see that big sell-off going on there happening at the moment. That becomes fascinating for us as traders. General Electric, okay, this has been in the news a little bit. You can see that that company is just struggling down there, isn't it? And we sort of talked a little bit about it around about the 12 level. Okay, the 12 had broken, and we can see that actually that's what's been going down. We're down towards 8, okay, which is fascinating, because even sort of just over a year ago we were at about 30. Now we're down to about 8. That's it's a quarter of its size then. And if you look at General Electric generally, well then that actually has just been that's just been just as bad, in terms of it's from where it's come to where it is now. It's quite the sort of the move. Here's Deutsche Bank. Okay, Deutsche Bank. I've talked about this on my blog. I've talked about this on the real-time daily trading idea sessions. We can see that has just been in a just a bigger descending triangle, and we just keep crunching our way through new lows there. Okay, I'm just you can see that there. We're just crunching away there, down at about 8.5. Okay, 8.5 for 8.5 on that. Okay, up from where we were. Look at that. If we were looking at that from sort of even at the sort of the worst part of the the best part of the boom, okay, we were up at 118. Okay, we're now down to about 8.5, and I think the story for Deutsche Bank just doesn't look good. Whatever. So we can see that those trends are in place. Okay, those trends exist. Those trends are in place, and it's about us being able to find nice little ways to be able to work with that. So there you go, ladies and gentlemen. We've run out of time today. I hope you found that useful. Okay, it's as always, I wish you the best of success in your own trading. You can join me on Tuesday morning, London, 10 o'clock for the real-time daily trading idea slot, where I talk about lots of these charts that we've just looked at. I'm also just utilizing all of the elements that we're talking about in the Mastering the 4 M's of Trading webinar. So there's a nice sort of connection between them both. By all means, please come and join us. Come and join in and see what will happen there. And and I look forward to seeing you at our next session. Thanks very much, and trade well, ladies and gentlemen. Phil says, thanks, Paul, another great webinar. That's very kind of you, Phil. Appreciate the feedback. I look forward to speaking to you soon.